Live from the Bay Area's news station, this is KRON 4 News at 4.
Last week's market move sent some looking for cover, while others went looking for bargains. Here to give us his thoughts on this is Anton Baer, Senior Vice President with CBiz. Anton, thanks for being here. The ups and downs last week, it felt like a correction to me because it was so fast and furious. It was much needed. What are your thoughts?
Well, as I said in my second quarter economic update, Rob, I felt that the first two quarters were very good. It was a broad-based rally, but after 11 months of a rally since July of last year, it was bound to see the market take some profits and see some type of a pullback, and it reestablished some new values. So I think we had a very nice, healthy correction. It was planned. It looked like it was appropriate. And since 1990, we've had a correction every calendar year, and the correction average was 12% going back to 1990. So we're right now about 9 to 11% in the major indices. Nothing to worry about at this point.
Now, do you think we're at the beginning of the end of a bull cycle, or do you think this is where the bear market starts to begin?
Well, that's always the question. When we go into a selling spree, do we see this as a fundamental correction in a bull market, or do we see this the end of a bull market and now entering a long-term trend of selling? Currently, we're seeing fundamentals continue to erode. Corporate earnings are now at 6.8%. That's a big drop from a couple of years ago where we saw a 24% year-over-year increase in corporate earnings. Meanwhile, core inflation is at 2.2%, so there's still a very nice healthy margin for corporations, but I see those two numbers getting closer and closer together, and there's still the all concern of the inversion on the interest rates. Short-term rates are now slightly above long-term rates again, so that's always a concern to investors.
So if we're at the end of a bull leg cycle, why aren't people taking money out of the markets and put it in their mattress? Why aren't you advising something like that?
Well, everything is timing, right, Rob?
Sure.
So if you pull out too early, you can leave a little profits on the table for the professionals to continue to benefit from. But you should look at the markets as a week-to-week, month-to-month basis, but once in a while you need to lift your heads up and look down the road and see where things are going. So I do see the market continuing to slow down going into 2008 and 2009, but currently there's still very favorable opportunities and good values. The S&P right now, the PE forward-looking earnings is at 14. That's still very attractive.
So what are we looking at for the next couple of quarters? What can we expect from the stock market?
I think we're seeing the end of this correction. I think the worst is over. We still might see some bumps in the road, but I think we'll have a decent year-end recovery from this. Going into next year is always a precarious year. It's an election year. It's a non-incumbent election year, so that's always going to be a factor that always weighs heavy on me when I'm looking at information. So in answer to your question, I think the next two quarters I think are favorable, and then we'll start assessing the impact of 2008. And if it's similar to 2004, most of the money will probably be made in the last 100 days of next year.
So tell me a little bit on the difference between amateur investors and professional investors in this market environment.
Yeah. The clear difference is that the pros make the money while the amateurs are losing money. So amateurs are selling when pros are buying, and then pros are selling when the amateurs are buying. And typically what you're seeing is at the bottom of a market, that's when finally the amateurs start, they throw in the towel and they start selling, which is right when the pros step in and start picking up. A good example is last Thursday. Midday I was writing my market media release and client release stating that I felt the market was still fine. At that point the market was down over 300 points. By the end of the day, as you know, Rob, it ended down 15. So the question that begs to be asked is who is selling in the morning and who is buying in the afternoon? And my interpretation is I think we're seeing the last of the amateurs beginning to throw in the towel and start selling, and the pros are ready to pick up good values in the market.
We're out of time. I need a yes or no. Is Ben Bernanke doing a good job right now?
Yes, I think he's doing a good job.
Okay.
I think the Fed fund rate this drop next week or next month will be a real telling on his position in the market.
Sounds good. Let's pull up your contact information. You do have an economic report that you will send to our viewers, absolutely free. You have to use the email address. It's abair@cbiz.com. It's abair@cbiz.com. It's Anton Baer, Senior Vice President at CBiz.